What is going on, coin traders? Thanks for joining me for the show. Looking at Bitcoin right now and looking at this extreme failed attempt for a breakout. We were kind of excited yesterday when we saw this breakout, but we know we actually needed to see follow through. And since we actually lost that, a huge failed breakout attempt right now for Bitcoin, which also plays out for the rest of crypto right now. Now, over on Twitter yesterday, we were actually looking at this breakout and talking about how if we actually held a back test of this trend line for consolidation, as well as the previous price level resistance right at 71333, that would be a very good setup to see continuation, but we did need to see that follow through. We didn't get that, and that's why now we are actually in this pattern where we are starting to get back into, it looks like, seeing more progression and continuation back inside this pattern. So extremely unfortunate. We did see that failed breakout attempt. We would have loved to have seen a small sell-off body confirming this level. Now we do have about 15 minutes. So actually, if we can see dip behind pretty much above the 70,000 to 71,000 level, we could see a nice daily close on top of this level. Not necessarily likely, in my opinion, right now in the next 15 minutes or so. And probably by the time we finish up recording this video, we will actually have a close on the daily candle for that. So nonetheless, do want to talk about potential scenarios now after having a very failed breakout attempt, because this does mean that the likelihood of a nice bullish breakout does start to fall and actually dip back into potentially now a bearish breakout, especially after longer term charts are extremely overbought, which we are going to look at here in a second. So yeah, make sure you are dropping me a follow over on Twitter. You can stay updated on all potential scenarios like this instead of having to wait for a video. At coin_trades is the handle. Looking forward to chatting with everyone over there. Now, one thing that I actually do want to look at right now with regard to the daily is kind of negate the fact that we were in consolidation pattern here and actually just talk more or less about this as a trend, because we still have been holding exponential moving average support. And in fact, right now, we are looking at support coming in right at the 12-period EMA. So very nice to see right now this daily candle, despite it being a sell-off, still looking like we are probably going to see a little bit of a hold above the 12-period EMA, which is still a very good sign. So when we do hold on top of this level, we do start to see that the trend still has a lot of continuation, despite the fact that we did get a failed breakout attempt. Also, we are looking at still higher highs and also higher lows now on this overall chart. So higher high, higher low, higher high. So could still pull back and actually set a higher low, which would actually need to come in on top of 64,500. Next thing we're looking at right now is this very big line, price level line right at 69,000. So that was the previous all-time high. So still seeing closes on top of the previous all-time high from last cycle at 69,000. So still we could call that a potential good sign. So more or less what we are getting at right now is, despite the fact that from the pattern we were looking at, we saw a failed bullish breakout attempt from that pennant, we are still looking at potential of seeing continuation, especially as long as we do hold these exponential moving averages to the upside and we don't start to get that bullish cross. So right now, we're not necessarily in jeopardy of that. So longer term consolidation and continuation is expected to continue right now, unless, like we said, we actually go down and break below 64,500, confirming that as a new lower low, and then also seeing a bearish breakout from that consolidation pattern. Now, I do want to flip over into the monthly. We haven't looked at the monthly in a little bit, and one of the things extremely important to note is just how we have seen 7 monthly bullish candles right now for a Bitcoin, which we haven't seen in a long time. So even the most recent bullish cycle, it was actually 6 bullish candles that we saw in that instance, pretty much back from October 2020 all the way through March of 2021. And then after that, big retracement to see a kickoff on the monthly of this 12-period EMA. So right now, very similar type situation where we have seen extreme run up and a very long run of all of these bullish candles. And right now we are super far extended on top of this 12-period EMA. So potentially could get another type of setup like this where we actually do see a pullback. Now, that's not impossible to say, especially after seeing such a strong run and such strong gains, just like we did see back in the end of 2020 and also the start of 2021. So a lot of that hype is kind of mirrored already with what we saw for not only the halving, but the ETF hype as well. So a lot of buying pressure from the businesses here getting on board with ETFs, as well as a big hype for the halving. Now, one of the other things I posted over here on Twitter was an article talking about how the Bitcoin halving could be a sell the news event, at least for a few months. And this pretty much lines up with what we're looking at right now. So if we actually have 3 months of pullback, that would actually pretty much mirror up with what we saw back in 2021 when we saw a pullback from April all the way to June. So even timeline-wise, this actually does mirror up. So since we are on the April candle right now, we could also see May and then June down to see a test off this monthly 12-period EMA. Now, I don't think percentage-wise we're necessarily going to get as much of a pullback, but right now on this monthly, we're actually looking at closing level, previous resistance, which would be support coming in pretty much right below the 50K level at about 47,000. So if we do get a pullback to that level, that would line up with these EMAs. Now, if we do see continuation out of that, I think we'll actually probably find support come in higher, which would align with about the $50,000 level, which is previous resistance also. So that is a very nice target to see if we do get 3 months or so of continuous pullback and cool down after all the hype from ETF and the halving event. So as you can see, the longer term charts are extremely overextended and even pulling up the stochastic RSI and the RSI as well. Do want to look at the stochastic RSI first because we were getting smashed up against the 100 level. Last time we actually saw that was in March of 2021. Did get our bearish cross, and then that's where we saw our 3 months of pullback. So right now, since the last time we saw that was that type of event, it's not unrealistic to think that that could also be a very nice expectation for why we actually need to see a bearish break from shorter term consolidation patterns and a longer term pullback to test some of these lower levels, especially after 7 months of just continuous bullish candles to the upside. So now looking at the RSI as well, we did top out at 76.79, but if we look the last 2 times that we actually got this overextended or overextended at all, we actually saw pullbacks. So even the most recent time when we saw the peak coming in for our previous bull market in October of 2021, and even in November, we actually did see this run up, but because it was a sell-off, we actually didn't get that close. But you can see that this was the last time it broke the 70 line, and then big pullback from there that started our bear market. Next overextended time previously, 3 months of pullback to actually normalize this again. And then even before that was our 2017 where we were that far overextended as well. Each one of these times, though, the monthly RSI actually got lower. So 2017, we saw the close at 96.22. We saw the close at 91.73 back in March of 2021. We got our most hype. And then even right now, like we said, 76.79. And a lot of the signs are looking for that pullback right now. But to the downside, we actually do have a little bit more lower support, 61,250. And also below that, like we said, we are looking at 58,750. So could actually see not necessarily that much of a retracement, more or less a type of flag pattern as we do start to wait for these EMAs to approach. But ultimately, like we said, we do still need to see this monthly chart start to normalize because we haven't seen 7 months of just continuous bullish action in a very long time. So now flipping over into the weekly, few things mostly want to talk about, but right now we're actually looking at a pretty good setup, but we do know that we are starting to get a lot of proof that we're seeing rejection coming in about the 71,255 line since we haven't seen a close on the weekly above it, despite numerous attempts to actually break that level. And we're also seeing very nice shaping bullish candles and small bodies on these bearish candles, but we also know that this is extremely overextended as well. So we did top out weekly RSI 88.26, so are needing now to actually pull back, especially since we do have stochastic RSIs rolling over as well. So given resistance up overhead and overbought conditions, do also want to look at potential for downside. So turning on the VPVR volume profile visible range, you can see pretty much just how this is a continuous slope to the downside. So ultimately, as we do pull back, we're going to start to see a lot more support coming in. So realistically, right now, I'm expecting the biggest point of mass that we would be looking at first to be coming in right about the $57,000 to $58,000 level. Looking left, that's going to be that big point of previous level rejection that we saw pretty much when we saw our max hype from about February until about May of 2021. So potential pullback from current levels in that instance wouldn't be super significant, but we would be looking at about a 15 all the way up to potentially even at worst about a 20% pullback in that instance if we do get down even into the low 50s. So not necessarily that unrealistic, and even looking at a Fibonacci retracement from the swing low that we were looking at up to the current trend high right now would be looking at about the 38.2, which is exactly the target that we typically like looking for when we talk about pullbacks and retracements for looking at continuous further upside gain, especially as we do get a kickoff from these exponential moving averages, as well as a good point on the VPVR, as well as previous levels of resistance. So that's why about 55K is going to be a very nice target to the downside if in fact we do get that bear break continuation with follow through and a little bit more normalizing and equalizing of the longer term charts. So despite all that bearish scenario, like we said, we are still looking at a bullish scenario so far on the daily chart, since we are still seeing relevance on the daily. So unless we actually get that bear break, we wouldn't be looking at potentially testing those targets. So right now, still in favor of bullish continuation and sideways trading more or less until we get the close of the halving event here in about 10 days. So could still see a lot of sideways trading up until that point, and then we would be looking at whether or not we're going to see a bullish or bearish break. So yeah, those are the scenarios that we're going to be looking at in this coming week to week and a half as we do look at the charts here. But overall, know that a bearish break isn't necessarily unexpected, and the longer term charts do have normalizing to do just from such long time period of extreme buying and euphoria here. Because after the halving event, we will have our major catalyst be out of the way. So that's why we are expecting a kind of sell the news event once that actually happens. Just like we saw a mini sell the news event happen after the ETF announcement, but we did still have enough buying and hype and euphoria and a lot of reasons to see buying from an institutional level in that instance. So yeah, with that actually is going to go ahead and wrap up our show for today on this Bitcoin analysis. Do appreciate you watching. Let me know your thoughts, comments, issues, disagreements down in the comments sections below. Do appreciate all the continuous love and support. As always, does mean so much. Stay safe, take care, and I'll catch you back in the next video.